My name is Akshamgar. I'm pre-finance intern at inSAKE Academy. Today I'm going to express my main topic, equity research and technical analysis. Equity research and technical analysis are both different approaches to in the financial market to analyze stocks and then recommendations to investors. As the both are different approaches, I'll explain this both the approaches separately. So starting with the equity research. Basically, equity research is the depth analysis of the any stock or company to assess their financial performance or long-term growth opportunities available, and then do the industrial analysis. So the main aim of the equity researchers is to give the value information into their equity research reports and then recommend to the investors, and based on that investors make the informed decision and do the investment plan according to it. So basically, any equity researchers can work independently in equity research or financial institute, and also in the any division of the investment banking, basically in the research part of the division of investment banking. So when equity research does an analysis to make the equity research reports, what key aspects they do keep in mind. So starting with fundamental analysis. Basically, it involves the analysis of the financial statement or the profit loss, balance sheet includes assets, liabilities, expenses. They see a lot of key metrics into the financial status. They check it out and then give the determines what are the instructive value of the company. So next is the industry analysis. Basically, they check what the company is operating into the industry. The industry have the trend going forward or not? What are the entry barriers into that industry? If the industry is heavy asset model, the opportunity of new players of entering is very less. If the competition is less, the opportunities to grow any business is more. So the company valuation, valuation models are there, like DCF model or 3-sector model that are taught in our modules. So through this we can analyze, determine the PE ratio or earning per share or the growth rate of what companies are doing, at what rate is doing. So at last they make the equity research reports, give their all the proper analysis of the company, and based on that investors make the decision about what the recommendation they implement. So now I'll explain what is technical analysis, how it is different from equity research. So basically, technical analysis is the analysis of the past history of the prices and then predict what will be the future price movement. So there are a lot of methods to do technical analysis, starting with I say indicators. Indicator does include the MACD, RSI, or moving averages is one. So other methods are chart structure. What prices is showing on the chart. Candlestick pattern is one. There are different kind of candlestick patterns, like bullish army, bearish like this. There are methods to do the technical analysis. Basically, if I say what is technical analysis in short word, it is the supply and demand. If these supplies and any certain point is there, the people will sell up their shares. If there is a demand and people are less, people are likely to solve up their demand and the price will shoot up. So there is probability of demand and supply. So if I consider both the approaches, on one side technical analysis and fundamental analysis, I say technical analysis or equity research, both approaches are done by the traders and investors. They both combine these methods. On one side, I say only technical analysis are used by the investors and traders, because they get the short-term signals on the charts, so they can go through it. But for in the equity researchers, they involve the fundamental analysis and the long-term opportunities. In-depth analysis they give to the investors so that they can make the informed decision. Thank you so much.